This is the third video in Fruition Capital's series that explores a sample business acquisition in the ETA space. In our last video, we discussed the standard sources of debt financing in a typical deal. Now, we will look at the equity side of the equation, which will fill the remaining capital needed to close the transaction. In this example, the equity contribution totals $2 million, representing 19% of the needed capital. Let's take a closer look at where this money comes from. The first source of equity comes from the entrepreneur. These individuals have invested a great deal of time and resources searching for the acquisition target and incurring deal expenses. But before raising outside capital from other investors, it is important for the entrepreneur to show a meaningful cash investment in the deal. Generally speaking, the less capital that is raised from outside investors, the more ownership the entrepreneur is likely to retain. However, as we will discuss next, it is wise to consider that outside investors bring more to the deal than capital alone. The remainder of the needed equity is raised from outside investors, which can come from a combination of groups that specialize in small business acquisitions, like Fruition Capital, as well as other investor groups or individuals. Outside investors provide capital in exchange for equity in the business. Additionally, they fulfill several other important functions as well. Companies like Fruition, which have a proven history of successful deal-making, often serve as the anchor investor and can assist in structuring and negotiating fair and favorable transaction terms, provide strategic guidance, and help with overall risk mitigation. Furthermore, they can add significant value to the business after the deal closes by leveraging their industry networks and sharing their extensive experience in owning and operating businesses. So that covers the equity sources for our sample transaction. While pretty straightforward from an overview perspective, there are a lot of important details and nuance that is unique to small business transactions. We will cover those equity details in the last two videos of this Fruition series. For now, though, we will return to the debt side and examine those details and typical terms in our next video.